You're watching Notepad. I'm your host Ibrahim Sani. Earlier this week, robo-advisor StashAway announced the completion of a $16 million or close to 70 million ringgit Series C fundraising round. This time, it's being led by Australia's largest VC, Square Peg, and of course the traditional investors of StashAway. That includes, of course, Buddha Principles Investments, as well as existing investor 8 Roads Ventures and others. Since its Series B fundraising round that was announced mid last year, StashAway has launched a few products in a few markets. In Malaysia, they launched a ringgit-denominated money market fund very recently, and we had them on the show then, albeit in a very interesting period or setting during the MCO. Because of the recovery MCO right now, we finally had the country manager of StashAway in the studio with us, Wong Wai Ken, joining us to discuss the ongoings of StashAway. More importantly, what are they going to do with that money that they have gotten from Series C? Welcome to the show, Wong Wai Ken. Thanks again for taking the time to speak with us. And of course, this is a live show. If people want to tweet questions straight to Wong Wai Ken, please do so right now. Let's start with 70 million ringgit. What are you going to do with it?
Thanks, Ibrahim. Just want to say that it's so nice to be on. You know, the MCO period was very tough on us all, but glad that it's all coming to a close.
We're not really out of the woods, by the way.
No, we're going through it together, but at least we can have this moment here.
Yeah, for now.
So 70 million ringgit, 16 million US dollars. We promise we won't spend it all at once, but obviously this goes into the company and expanding it in the region. As you know, we are leaders in Malaysia and Singapore. So a lot of those funds will go towards consolidating our position here, introducing new products and features into Singapore and Malaysia, and delighting customers by growing their wealth.
Some would argue that the fundraising was so close to between one another, but then again, if you look at Series A, it's actually quite close to Series B, it's actually quite close to Series C. You guys are growing strength to strength. What's going on here?
Yeah, I think the formula works, right? We tried launching out of Singapore into Malaysia 2 years ago, and that has done tremendously. We have 2 products here in Malaysia, the StashAway Global Portfolios on top of StashAway Simple that we launched a month ago. The success has been really tremendous, and we think that there's so much opportunities in the region and still to be had in Malaysia that we wanted to fundraise in this period to really address this market.
See, the thing about some of the investors, at least for this round, is that Square Peg, for instance, continue to invest in Singapore-based companies like FinXL, Chop, Dr. Anywhere. That's not much that is happening in investing in Malaysian startups. Do you think that, say, for instance, Maitio and Wahid, right, your 2 other competitors that we're talking about when we talk about robo-advisors in Malaysia, they don't raise as much funds compared to you guys because they're not in Singapore. Is that the appeal there?
I think we're looking at very different business models here. I think when we focus on what we do, we are in markets that are really meaningful, really large wealth markets. And these funds will actually really help us grow in those spaces. So there's a lot of inefficiencies when it comes to wealth management in Malaysia and Singapore. And that's why we really want to grow there. I can't speak for my other esteemed competitors there. But I think these funds will really go the great distance into strengthening our position. And like I said, introducing more products into Malaysia as well. Another thing to note is that we are based in Singapore, yes, but we like to think of ourselves as a regional company. And maybe a note for Malaysian investors and Malaysian startups as well, it's time to start thinking beyond Malaysia, some sort of regional approach to really get international level capital, like the ones that we have attained, to really build a great product and ultimately attack a space that could be very, very profitable for us.
Would you argue that there's a lot of money still to be invested out there in the markets, or your cash is dried up?
No, I think from a VC perspective, there's a lot of spare cash, a lot of dry powder, so to speak, but it's very tricky because of MCO. So the big criticism before all of this was that what would happen to robo-advisors like StashAway if there was a crisis, a global financial crisis, for example, like we saw in 2008. So I think the COVID crisis really instilled confidence in our investors because we actually navigated through that very well through March and April. And that really said, hey, these guys can actually manage through difficult waters, right? And because that question is now answered, the business model speaks for itself. They are doubling down and investing further.
You see, the thing about, we've had this conversation before actually when you talk about investor appetite, investor risk, knowing how much you can bear in terms of the losses that in case things go south. I'm one of those risky investors when it comes to StashAway, but I'm not in others. And when we talk about the investor appetite, things have gone down a bit, but you're still registering quite sustainable growth. And in fact, in this annualized general return that you guys published is actually quite high, 11.1% for its highest risk portfolio. This was before, of course. We don't want to talk about this here. And for the lowest risk is 4.3%. And of course, the money market, which you guys are guaranteeing at 2.4%.
2.4%.
These are reasonable investment portfolio appetite to have. But at the same time, people are getting a little bit more aware of what robo-advisors do.
Yes.
Do you think that because of this MCO, it actually brings about more light in terms of investor awareness into what you guys do actually for a living?
Yes, absolutely. So just a couple of things here. The StashAway Simple is a projected rate of 2.4%, not a guaranteed rate of 2.4%. I think that's important to note. And the returns that you mentioned just now, it includes the current period. So it's since the inception of our fund. So we are giving very, very positive returns for all the range of our portfolios, which include this COVID period, which shows you that, like you said before, it's about how you construct a portfolio and how you navigate risk. We're not about flashy investments that really kind of get you rich overnight. It's something about investing about long term. We make it easy for you to hold it for the long term. So when you look at returns like that, they're modest, they're okay, but know that they can weather the storm and something they can hold for a very long time. So that's important. And then you also mentioned the lockdown period. I think that actually had a very severe impact on people's bank accounts and wallets. So people had to really look at what they invested in and what they saved, right? And I won't paint a broad brush and say that all Malaysians are the same. There's a lot of interest in rubber gloves, for example, a lot of interest in US markets, in tech, for example. And StashAway is part of that. I think we are slowly becoming a mainstream alternative, and we definitely saw a spike in account openings in this period. It has not slowed down.
Oh, really?
And
in
we
Malaysia?
actually, correct, yeah. And we actually saw a huge jump in users opening accounts in the older demographic, 40 and 50-year-olds.
Okay,
So
that's interesting. This is
it is.
really, really new for us and for you guys, actually. So you're saying that the older generation is getting more aware in terms of what you guys are offering. Let's talk a little bit about the aspect of StashAway rolling out products currently right now. Do you think that I guess the valuation is putting you in a good valuation area? You raised 12 million before,
Yes,
US.
yes.
Now you're raising I don't know how much.
16 US dollars, yeah.
So, are you on the way to being a unicorn?
Oh, we certainly hope so. I think that's the expectation, at least from all the investors and the angel and the VC investors that have invested in StashAway. I think there's tremendous potential when it comes to deepening our focus in markets that are very inefficient. When you think about how people buy wealth management products in Malaysia, it's a lot of product pushing, a lot of high fees, a lot of bank branches that are required, huge agency force. So we are really attacking that space because we can break down all those barriers and have people invest by just downloading an app, right? So because of all those inefficiencies going away and a very good product like we are offering where we invest people's money overseas, something that not a lot of Malaysians do, I think that we are in a huge market. And Malaysia is not alone in this space. You know, there's other regions around Asia and definitely Singapore that is facing the same trend. So we are focusing on all these inefficiencies and really hoping that we can invest people's money better for the long term.
All right. Okay, we're moving towards other markets right now, but we'll go for a short break. When we come back, we'll discuss with Wong Wai Ken of StashAway regarding the regional expansion of the company. Don't go anywhere. Thanks for staying on with us. I have with me StashAway's country manager of Malaysia, Wong Wai Ken. Wai Ken, let's talk a little bit about the regional expansion of StashAway. You are, at least in Malaysia, regulated by the Securities Commission, and you are indeed looking at other markets, you meaning StashAway, not just you individually, personally. But based on some of the statements that I see on the friends that you have on your LinkedIn, you know, there's like colleagues from Thailand, from I guess UAE, from all these other countries. Do you think you can share with us your regional expansion of the companies when it comes to, you know, that kind of market?
Right. So we did mention that we are looking at other regions, other countries in the region, and those countries that you mentioned, UAE and Thailand, and as well as Hong Kong, are on our radar. So what we like about those markets is that they are a little bit different to Malaysia and Singapore in terms of size, but they also share some of the inefficiencies that we see here as well.
Hong Kong inefficient,
Yeah, the fees are still really high. There's still a lot of bank branches. There's a lot of selling of investment-linked products, which we all know have a lot of fees in them as well. So each market have their own different
like
inefficiencies.
quirkiness.
Yeah, correct.
The one big thing that comes out of that came out of Hong Kong very recently is, of course, the bundled tech stocks. It actually went down a bit. The Hang Seng Tech Index, 45 companies are there, I think, and of course, providing about annualized return of about 45% if you actually look at past performance based on these companies. Seems like an interesting bundle that investors can look forward to. But do you think that these kind of markets actually quite matured? Yeah, I take your
Very
point in
mature.
terms of fees, but really, Hong Kong inefficient?
Yeah. I mean, they're still stuck in the past in certain respects. But I think what I want to focus on here is that, you essentially in Malaysia have a world-class product we're trying to roll out in different parts of the world. Although they are addressing different needs, for example, in Malaysia, we talked about the high fees. In Thailand, for example, they have a lot of similarities between us where not enough money is diversified overseas. When you look at Dubai, for example, you have a huge expat population, very similar to Hong Kong and Singapore, and that needs an avenue to be invested as well. Granted, we're still working towards licenses in these geographies, so I will be as non-specific as possible about those applications.
Well, we can still talk about the markets per se in general. Let's talk about Thailand, for instance. Yes, we're talking about a market that is quite new when it comes to equities and markets that are such as Thailand. I don't know what the investments are like, at least on the individual level, retail level of these population there, but I would imagine it to be quite nascent compared to, say, for instance, Malaysia and Singapore. But like I said, I don't have the data. What's it like for robo-advisory in Thailand? Is it a big thing?
So we're barely scratching the surface. There are some local competitors that have launched. But I think the thing about Thailand is that their local retail investors are very involved in the stock market. So they trade at a very high velocity compared to Malaysian investors. And that shows that there's interest in investing, people want to grow their wealth. But at the same time, the fees are still very high, right? It's still very hard to invest overseas, right? So we want to try and make it easy for people around the world and in Thailand, like you mentioned, to invest their money. Financial literacy is also something that differs across different regions. Malaysia and Thailand are about the same level, still very low, still quite conservative actually. Like in Malaysia, we love our FDs. It's the same there as well. But in other countries, like say in Hong Kong and Singapore, they're a little bit more financially literate and maybe a bit willing to take risks as well. So we think the way people will use StashAway in those different countries will be different. But ultimately, it's still part of growing your wealth in the long term. So we are in still very, very early days.
If you enter new markets, right, including Dubai or UAE for that matter, do you think that you're going to execute the same strategy here, which is to invest in ETFs in the US as well as tech stocks in China?
No, I think we will focus on the core portfolios that we have right now because those are universal, broad investment products that anyone can use. Yeah, so it's whether they want to use it to take more risk, whether they want it to be more diversified. The use case is different for different countries and certainly different individuals in Malaysia as well. I think when it comes to different countries, what we have to be very careful with is the regulatory environment and also the localization when it comes to the marketing aspect and the messaging, right? So in Malaysia, we have our own flavor when it comes to building trust, understanding the product, investing ultimately, and then all the competition that comes along with it. That's the same in other countries. So we don't want to take the approach where we just paint it with the same brush, right? But we do think that we have a world-class product here, and then we will localize around the messaging, and then if there's a need for local products, we'll look into that as well.
Okay, we'll talk a little bit about the money market product that you guys launched. Let's, when it was first launched, I had you on the show.
Yes.
Right now, I just want to do a quick follow-up. How's the reception been like from the market? Because this is a not new kind of product that the market doesn't understand yet.
Exactly. No, I smile because we did that over webcam, and when when I went live on TV, I was very pixelated. So
now we got you there.
now we got me here with the beauty filter. So I really appreciate that. So yes, it's actually only been 6 weeks, but the traction has only gained, and that's because new investors have found out about it. We have done more marketing around it, and not to forget, a very, very big deal is that the OPR rates were cut 25 basis points, and now prevailing FD rates are only around 1.8 to 1.85, 6 to 12 months lock-in. So with StashAway's Simple offering projected 2.4%, this is a great spread. It's something that we are very excited about and think that people should take advantage of. It's just that, like you said, there's not enough education around the underlying asset, which is money market funds. It's basically one of the most invested in asset classes in Malaysia. It's actually 20% or 150 billion ringgit of all the unit trusts in Malaysia. It's actually very, very huge. It's just that it's not marketed to individuals like you and I. Usually it's for corporates with millions and billions on their balance sheet to put their working capital to some sort of work before it's deployed.
Because it's a lot easier to communicate something that the market already understands. FD, for instance. It's a trusted and well-known instrument that everybody understands. You don't even need to go into detail.
Correct.
And people can spot the kind of things. When you say 4.8%, investors are like, okay, but for how long? First month, that kind of thing. But when you go into money market products, it's a bit different, and you have to start it again. Just like, for instance, when you started Islamic banking, where there's a lot of customer education. Do you think that's going to be changing in Greece?
Yes, if you go back a long time ago and you ask people with horses and carriages, what do you want? They'll say a faster horse, right? But here we are, with the Tesla equivalent, if you like, of financial products, and we like to reorient a little bit about how we use money market funds, right? If you have emergency funds, if you have spare cash lying around before you spend it, you want to put it to work, right? So 2.4% is a great rate to put it to work in, and I think that education is worth it. We've only been in the market for 2 years in Malaysia and 3 years in Singapore, and we only go from strength to strength. And the Series C just provides that stamp of approval from new investors, international investors, that this strategy works.
Okay, we'll go for one more short break, and then you guys can ask Wong Wai Ken straight what you think about the latest ongoings of the country. Don't go anywhere.